Hello, and welcome to Money Deconstructed. Are you feeling that nagging frustration with your current bank? Maybe it's the unexpected fees, the inconvenient hours, or perhaps you're just starting out and feel completely overwhelmed by the sheer number of banking options available. It's easy to underestimate, but choosing where you keep your hard-earned money is a significant decision, one with real consequences for your financial life. Today, we're going to tackle this head-on. We're breaking down the essential factors you absolutely must consider before you choose a new bank or make the switch from your current one. Why does this choice deserve such careful thought? Because the right bank can save you money, offer genuine convenience, provide better service when you need it most, give you access to the financial products you require, and ultimately, grant you peace of mind. This isn't about picking the bank with the flashiest television commercial or the one that happens to have a branch on your commute. This is about making an informed, rational decision that aligns with your specific needs and habits. We're here to help you deconstruct this often complex choice into manageable, understandable parts, covering everything from the obvious costs hiding in plain sight to the finer details that often get overlooked until it's too late. Let's begin by examining the most direct impact on your wallet, the fees and costs associated with an account. These charges, sometimes small, sometimes surprisingly large, can significantly eat into your savings over time if you're not careful. Think about the potential costs you might encounter. Often, there are monthly maintenance fees, simply for having the account open. However, many banks offer ways to waive these, perhaps by maintaining a certain minimum balance or setting up regular direct deposits from your employer. It's crucial to understand these waiver requirements clearly. Then there are overdraft fees, which can be particularly painful. Understand how the bank handles overdrafts. Do they charge a standard fee per transaction that overdraws your account? Do they charge an additional extended overdraft fee if your account remains negative for several days? Explore their overdraft protection options, perhaps linking your checking to a savings account, but be aware that even these protection plans can sometimes come with their own transfer fees or interest charges. Don't forget about ATM fees. If you frequently need cash, relying on your bank's ATM network is key. Using an out-of-network ATM can often result in two fees, one from the ATM owner and another from your own bank. Check if the bank belongs to a large fee-free network or if they offer reimbursements for fees charged by other banks' ATMs, which can be a valuable perk. Consider wire transfer fees as well, both for sending money domestically and internationally, as these can be quite substantial depending on the bank and the destination. And keep an eye out for other potential charges that might be lurking in the fee schedule, things like fees for receiving paper statements instead of electronic ones, fees for closing an account too soon after opening it, charges for replacing a lost debit card, or even inactivity fees if you don't use your account for an extended period. The key takeaway here is vital. Don't just glance at the advertised features or the welcome bonus. You must dig into the detailed fee schedule, usually available on the bank's website or by request. Ask yourself honestly, based on my typical banking habits, which of these fees am I most likely to encounter? Now, let's shift our focus from costs to potential earnings. While checking accounts rarely offer significant interest, where you choose to keep your savings absolutely matters for making your money work for you. When comparing savings accounts, the critical number to look at is the annual percentage yield, or APY. This reflects the total amount of interest you will earn in a year, including the effect of compounding. You'll often find a noticeable difference in APYs offered by traditional brick-and-mortar banks compared to online-only high-yield savings accounts, which typically offer much more competitive rates because they have lower overhead costs. Beyond standard savings, you might also consider certificates of deposit, or CDs, where you lock your money away for a fixed term in exchange for a potentially higher, guaranteed interest rate. Money market accounts are another option, sometimes offering tiered interest rates based on your balance and often providing limited check writing or debit card access, blending features of checking and savings. For your savings goals, prioritize finding accounts with higher APYs, especially if you plan to maintain a significant balance. Always make sure you understand the terms and conditions required to earn the advertised rates. Sometimes minimum balances or other stipulations apply. Beyond the numbers of fees and interest rates, we need to consider how you'll actually interact with your bank. Think realistically about your preferences and needs when it comes to accessibility and convenience. Do you value or even require the ability to walk into a physical branch? Perhaps you need face-to-face assistance for certain transactions, depositing cash regularly, or accessing services like a notary public or a medallion signature guarantee. If so, the location and operating hours of the bank's branches are paramount. How close and convenient are they to your home or workplace? Alternatively, perhaps you rarely need a physical branch and conduct most of your banking digitally. In that case, the quality of the bank's online platform and mobile app becomes crucial. Is the online banking website easy to navigate and use? Does it offer the features you need, like seamless bill pay, easy fund transfers between accounts, and access to past statements? The mobile app, for many, is the primary banking tool. Check its user reviews in the App Store. Does it offer reliable mobile check deposit? Can you easily send money to friends and family using services like Zelle or other peer-to-peer payment options? Does it provide useful alerts for low balances or large transactions? The right balance here is personal. Weigh your need or lack thereof for physical branches against the quality, functionality, and convenience of the bank's digital tools. Your personal preference and lifestyle are the deciding factors in this area. It's also important to look beyond the basic checking and savings accounts. Does the bank offer the specific types of accounts and the broader range of financial products and services you might need, either now or in the future? Of course, there are various types of checking accounts: basic, student-focused, senior accounts, perhaps even interest-bearing checking. Likewise, savings accounts vary from standard options to high-yield versions. But think about your holistic financial picture. Might you need access to loans through your bank in the coming years, such as a personal loan, an auto loan, or even a mortgage? Does the bank offer competitive credit cards that align with your spending habits? Are you interested in investment services or financial advising, and would you prefer to have those integrated with your banking? If you own a small business, does the bank offer suitable business banking accounts and services? While you can certainly use different financial institutions for different needs, sometimes having multiple products integrated at one bank can offer relationship benefits, streamlined management, or even better rates. Consider your potential future needs when making your choice. Now, let's talk about something that often seems invisible until you desperately need it: customer service and support. When things go wrong, a fraudulent transaction, a technical glitch, a question about a fee, good customer service becomes absolutely critical. How can you evaluate this before becoming a customer? Look into their service availability. What are the hours you can reach someone for help, whether by phone, online chat, or in a branch? What channels do they offer for support? Is it easy to find a phone number or initiate a chat, or do you have to navigate a maze of automated menus? Reputation matters here too. While taking online reviews with a grain of salt is wise, consistently poor reviews regarding customer service can be a red flag. Perhaps ask friends or family about their experiences if they use a bank you're considering. A key question is, how easy is it to reach an actual human being when you have a complex problem that an FAQ page can't solve? Don't underestimate the value of helpful, accessible, and knowledgeable support when you encounter an issue or simply have a question about your account. In our modern world, technology and security are intrinsically linked to banking. Beyond the basic online and mobile access we discussed, what other tech features does the bank offer to enhance your experience and, just as importantly, keep your money safe? Assess the quality and reliability of features like mobile check deposit. Is it consistently easy to use? Does the bank integrate smoothly with popular peer-to-peer payment systems like Zelle, making it simple to send and receive money? Do they offer built-in budgeting tools or spending trackers that you might find useful? Can you customize alerts to notify you of low balances, large transactions, or other important account activity? Some banks offer advanced card controls directly within their app, allowing you to instantly lock or unlock your debit card if you misplace it. Equally important is the bank's commitment to security. Ensure the institution is federally insured. Look for the FDIC logo for banks or the NCUA logo for credit unions. This insurance protects your deposits up to the standard limit, currently $250,000 per depositor, per insured bank, for each account ownership category. This is a fundamental safety net for your money. Also, check that the bank employs robust security measures like multi-factor authentication for logging into your accounts and has strong fraud monitoring systems in place to detect suspicious activity. You need confidence that the bank uses up-to-date technology not just for convenience, but also for the rigorous protection of your finances and personal information. As you narrow down your options, it's helpful to understand the general characteristics of different types of banking institutions. Big national banks typically offer the widest network of branches and ATMs and a comprehensive range of financial products under one roof. However, they might sometimes come with higher fees or less competitive interest rates compared to other options. Community banks are smaller, locally focused institutions that often pride themselves on personalized customer service and involvement in the local area, though their branch and ATM network might be limited and their technology offerings may not be as cutting-edge. Credit unions are nonprofit cooperatives owned by their members. This structure often allows them to offer better interest rates on savings, lower fees, and a strong focus on member service. However, you usually need to meet specific eligibility requirements to join, based on employer, location, association, etc., and the size of their networks can vary significantly. Finally, online-only banks operate entirely without physical branches. Because of their lower overhead, they frequently offer the most attractive interest rates on savings accounts and charge the fewest fees. They typically excel in technology and mobile app functionality, but you sacrifice the ability to bank in person. Understanding these general models can help you filter your search based on which type best aligns with your core priorities. So, how do you take all these deconstructed factors and put them together to make your final decision? The most crucial step is to prioritize what truly matters most to you. Remember, there is no single, best bank for everyone. There is only the best bank for your individual circumstances and preferences. Here's an actionable step. Take a moment and list your top 3 to 5 must-have features or factors. What are your non-negotiables? Is it absolutely zero monthly maintenance fees? Is it a top-rated, feature-rich mobile app because you do everything on your phone? Is it the highest possible APY on your savings? Or perhaps it's the convenience of a branch located just down the street. Once you have your personal priority list, use it as a lens to compare 2 or 3 potential banks side by side. Look specifically at how each one stacks up against your most important criteria. You might find helpful comparison tools or reviews on reputable financial websites, but always verify the information directly with the banks themselves, as offers and terms can change. And one final, essential piece of advice. Before you open any account, always take the time to read the account disclosures. That fine print contains the specific terms, conditions, and fee schedules that will govern your relationship with the bank. Choosing a new bank doesn't have to feel like guesswork or a leap of faith. By systematically deconstructing the decision, by carefully considering factors like the fees you might pay, the interest you could earn, the accessibility you need, the technology you'll use, the service you expect, and the security you require, you can confidently find the financial institution that truly fits your life. Take the time to do this research. View it as an important investment in your own financial well-being. If you found this breakdown helpful in deconstructing your banking choice, please take a moment to give this audio guide a like. We'd love to hear from you in the comments below. What is the single most important factor for you when choosing a bank? And be sure to subscribe to Money Deconstructed for more insights and analysis aimed at helping you make smarter financial decisions. Thank you for listening.